All right, government shutdown. So, how does this impact your retirement investments, the stock market, your short term investments, and anything that's related to the stock market? We're going to go over the details and the actual data so you can see, I should say, historical data. Let's not mess around. Let's just dive into it. So, it's the first government shutdown since 2019. Feels like they happen sort of frequently, and that's probably because you had 2019, then you had 2018, and there was, all that great stuff there. But yeah, it is a little bit more common. But what we're going to look at today is the performance of the stock market, the performance of investments, the performance of October. We're going to look through those data points there so you can kind of see, is it good, bad, or ugly? Let's take a look. So first thing we're going to look at is the last. So there's 6 shutdowns that lasted more than one day. So follow me here on the top just so you can see what we're displaying. We've got 1990. We had a 3-day government shutdown. Now, what I'm going to point out, I'm going to come back to this in a second, is we were 15% off of 52-week highs. So we were not at all-time highs. The market was just chopping around there and a little bit weak. Then what we're showing is the performance 1 week, 1 month, 3, 6, and 1 year later, right, from the start of the shutdown. So we have 3 days worth of a shutdown. We're starting it on this date. So that's your performance there. Naturally, 1 week later, the shutdown had ended within 5 days. And so here's your performance going forward. Work your way down. The longest shutdown in history was the last one, 34 days. That was remember that one? I actually remember that going like, what? What's happening? What I want to point out is we were 17% off of highs. So we were not where we were like right now. In 2018, and I would argue 96 and 2013 and 95, those 4 events right there, we were basically at highs, which is where we're at now. So I find that a little bit more interesting, but let's move forward. What I want to point out is that if we look at individual instances here, in the 1 week and 1 month time period, yes, you're going to notice a little bit more volatility. The average is flat for 1 week, a little volatility, but not much going on. Median 0.6%. If you look over 1 month, 2.2%. We're skewed a little bit by 2019. Remember, we were down on that instance there, so we're actually in the point of like a mean reversion at the same time. But nonetheless, that skews the numbers just a touch. 95 was okay too. Over 1 month, some volatility, but all in all, fine. As you go out further in time, you realize that as an investor, if you're someone who is looking at your 401k, your TSP, does the government shutdown really impact you very much? No. I mean, there's nothing there. The market behaves as the market's going to behave. Really interesting. Another way to look at this, by the way, we could go here. So here are those 6 shutdown, the previous ones, the 6 ones, inside of the market's performance. So you can see if we just zoom out and go, hey, right here, there were 2 shutdowns. Hey, right here, right? See that one, that 18 and that 19 that we just showed back here. That would be these 2, the last 2 that just came up. Okay, that's where we were. Huh. Okay. As you zoom out as a long-term investor, this doesn't really matter. Now, I would point out that in the long term, yes, it's fine. There's no issues there. I'm gonna come back to that in a second. But in the short term, yes, and what we're seeing, right? You see that volatility creeping in with the news and media frenzy of this shutdown. Now, go out to 3 months, 6 months, and 1 year. Did something a little bit different for you. Why is this right here? I'm sorry about that. Okay, check this out. So we're looking at the S&P. You got 3-month performance. Average performance from the start of the shutdown, 6.4%. 6 months, 12.4. 1 year, 17.9. Those are just numbers, right? We need something to tell us that that's either interesting or not interesting or scary or whatever. So let's go to 3 months. We did something really cool here. The average is 6.4%. Any 3-month average window, the average performance is 3%. That's what this is down here. This is just the S&P's average performance in a 3-month window. Looking back to 1990, not just cherry picking, but just the 3-month average performance. Then we did 6 months and 1 year. What's really interesting is over that, I would say, sort of midterm here, when government shutdowns happen, the S&P on average outpaces its average performance. In other words, it outperforms itself, right? Over 3 months, 6 versus 3, 6 months, you got 12% versus 5, 1 year. You get what I'm saying, right? Really kind of interesting there. So you would think government shutdowns are chaotic for the stock market. No, we don't have much to prove that, other than, yeah, the week of that all happening there, where the shut, oh my gosh, it's a big deal. Okay, yeah, that tends to cause a little volatility, positive or negative. That's fine. As we zoom out, you can now obviously see the 1 year time period going forward. Okay, we outperformed. Okay, we outperformed. Okay, we outperformed, right? So no issues there. Now let's take it a step further here. Oh, I'm going to go one back too. 1, 2, 3, 4 times we were essentially at all-time highs. You could use that too and say, well, let me take off the sort of oldest outlier. Let me take out the furthest away from 52-week highs, and let's just see what happened there. So if you want to play, and I mean, it's not a lot of instances, so it's kind of hard to do anything there. Okay, let's go a little bit step further, because we're also going into October. If we look at October, I like to do this for clients each month. I show the average intra-month performance. All we're doing here is saying, take the average of each individual hour per day to plot a chart over the course. So in other words, we're going over the last 10 years, hour number 1 of October 1st. We have 10 of them, right? Not 10 hours. We have hour number 1 of October 1st last year, the year before. We take the average, then we keep going forward. That's all we're showing on this chart. So I don't want to oversimplify. This is the average performance inside of the month of October. The green line is over the last 10 years. The blue line is going back to 83. In this case, and we're going to do a little bit more here, but let's look at October. So over the last 10 years, obviously October tends to be positive. Looking back further, still positive, a little bit more choppy. So intra-month performance, at least for the start of the month, tends to be a little bit choppy, but positive. Now, September had a different story, and we didn't see that in September, so a little bit different there. So all in all, average performance, if we look at anything like this, we'll come back and address it and see what happens. Now, if we zoom in a little bit here, look at a little bit more detail, what if the year was down going into October? October is the most volatile month of the year. I don't know if you know that, but I'll actually share that with you in a second. So what if we were down? Well, that's the dark red line, okay? If you're down going into October, fine. It tends to sell off a little bit in the beginning, rally back, have a positive performance. That's better than any other type of scenario. But we're up more than 10% going into October. So, excuse me, if you're up 10% or more, there are there's 16 available years where that's happened. That's the green line. So follow the green there. Okay, fine, 10% or more going into October. Momentum tends to continue. It does sell off towards the end of the month, at least on average. The green line is skewed a little bit because of 1987. Right? If you are from that time period, you can understand, and you believe me when I say, well, that's why it's skewed, right? Go look at the performance. So we also put the gray line on here that says, okay, well, take out 1987, pretend that's an outlier event. You still have a positive return through the month of October, although volatility and the overall trend is not like super exciting. Ideally, for the month of October, if you were going to try to assume the best possible performance, you would hope that the stock market was down going into October. That is not the case of what we have so far. All right, lastly, what I want to share with you here is, why is October considered the most volatile month? Here's what we're looking at. Don't let it scare you. I'm going to start with January just so you know what we're saying. The max average gain in the month of January for the S&P, 3.52%. Flip it to the downside and go, ooh, what's the average, the worst to the downside? 3%, basically. Okay, so give or take 6.5% is your expected range, or average range, I should say. February, you can see how the range is smaller. March, smaller. April, smaller. May, well, getting into the summer months there, a little bit quiet. July as well. And you come out of the summer months, and what happens? The range starts stretching. Well, you get to October, you got almost 4% to the upside and almost 4% to the downside. So just under 8%. And that's why they say October is the most volatile. Now, I want to be conscious of saying volatility does not mean negativity. Volatility means whipsaw, right? If you had put water in a bathtub, right? Volatility is if you shake the water a lot. Didn't mean the water's spilling over and all hell breaks loose. It means the water's just moving around a lot. It's uncomfortable, right? So that's volatility. We could have positive volatility and we could have negative volatility. So that's it. Anyways, just wanted to share that with you. I thought you guys would have some fun with that, with the government shutdown. All in all, if you are a long-term investor, it's not bad news that the government shuts down, and there's not really that many scenarios over the course of a generational savings period. Is that a thing? Why did I just say generational savings period? Over a savings period, a lifetime savings period for you, really not going to be that big deal. And actually, you'd kind of hope that this average stays the same because it outperforms itself, right? In the short term, if you're a trader, an options trader, something like that, all right, it's good stuff, right? It creates volatility for you. Volatility creates higher premiums if that's what you're into. It creates more day trading opportunities if that's what you're into. But it is going to be volatile. I mean, that's just it. And yeah, that's all I got. I don't mean to like draw this out. I just thought you guys have fun seeing that. Let me know what you think. Government shutdown. I don't really care about the politics of it. Market-wise, what do you think? Were you a part of this in the past? And what did you notice? Did you panic sell? Did you think? A little panic selling? Now, I hope the market pulls back. I mean, it is, but like I want it to, a little bit more would be good. Just quickly. And then take back off. All right. See you later.